a little bit of a risk disclosure warning here. And this warning effectively says that trading stocks, futures, options, commodities, it really doesn't matter what you're investing in. It does carry a certain level of risk. Now, in this instance, CFDs are a leveraged product and it can give you more losses than you anticipate, but hopefully that won't be too much of a problem for you guys because you are learning from some of the best around the globe. Now, let's move on from our risk disclosure warning and have a little bit of a look at what might be happening on the charts today. Now, there is, like I said before, there is actually a fair bit of work to be looking at when it comes to these charts. In the last sort of 24 hours, we've seen a lot of different market action. And this really what's kicked it all off today has probably been the start of the inauguration of President Joe Biden. So I'm so glad I don't have to say president-elect anymore because it's just getting to a mouthful. Now, looking at charts that we've got here, I'm just going to put on the weekly here for all of these four here so you guys can sort of see what I'm looking at when I'm talking about these charts. Now, what's really gone on behind the scenes is we've seen the inauguration happen. There's not been any riots. There's not been any controversy that's really come from it. And he's gotten straight into the tasks at hand. And we already have some inclination on what he's planning to do throughout his first term, particularly when we think about what we've heard from the new Treasury Secretary, former Fed Chair, Janet Yellen, who is saying that stocks need, or basically the economy needs a lot of stimulus to continue, and that's always a positive sign for stocks. So that's where we've gotten sort of the starting boundaries from it all. And then today, just with the inauguration, has been the little bit of a pop that has provided a little bit more optimism to the market. So really, we've seen stocks climb to all-time highs overnight. We've seen European equities up. We've seen most Asian equities up, particularly out of Hong Kong. And it's really focusing on this idea that now that we've had we've got a bit more of I suppose, a presidency that comes with a little bit less drama than what the previous one did, and probably some more traditional presidential styles of management, I suppose, would be the way to look at it. The other way to sort of look at these things is that with stimulus, it brings more value to companies and stocks, even though if it's not immediate, it means the idea that there's likely going to be spending and economic growth. And we're looking at really trying to revive that. And so that all bolsters some of the corporate earnings that may happen. Now, naturally, the counter argument to that is that we end up seeing I'm just going to open a new window here so I can show you the dollar index. We end up seeing a counter opposite of that, which, would be on the dollar index. Oh, I don't seem to have it on here. The dollar index is down probably about 0.1, 0.2% today. Unfortunately, on this MT4, I'm not going to be able to show you that tonight, but I'll ensure that next time it is. Now, when we look at what's going on with that, we've seen it sort of sitting right on a little bit of a technical recession. So I can actually show you a chart I've just found on the dollar index on Bloomberg. So here is the dollar index on its way down. This is the Bloomberg dollar spot index, which is very, very similar to any others. They've got some Fibonacci levels on here. Price just seems to be stuck at the 23.6%. But whether we look at the Fibonacci or not, or even this 50 moving average that they've got up on here, really, this is a resistance line that we're now encountering for the dollar index. And so when you think of the dollar index, we actually do see a fair bit of different sort of price movements going on because it's averaged out across all the different ones that are different dollars that are out there available for us on the US side. So what really happens in this circumstance is we're seeing bond prices starting to, dwindle and hover at about that 1% range, and the added money that's going to be coming in, $1.9 trillion of stimulus, will devalue the currency. There's more currency in circulation, so each individual note will be worth less. So, outside of that, what can we look at on charts? Right here in front of us, we've got the S&P 500, which again has moved up, moving us to a daily chart. We can see it has not really ticked up a huge amount, but it's ticked up enough for us to find a new high yet again. And the same on the Nasdaq, which has really been the performer of the day, who has really pushed up in the last sort of 24 hours. And we have to sort of incorporate, I'm incorporating on our time zone, so we're kind of in Australia. So, we've got a little bit of the previous candle being, this one where my crosshair's sort of on now, and a little bit of this one as well. So, it has had a fairly significant move. I know this morning when I was looking at the prices on the Nasdaq, futures were up like 2.3%, and the index, which is what we're looking at here now on the NAS 100, is up probably matching that by now, I would say. But future markets tend to have a little bit of lag when they close for the day. So, there may be a bit of catch up to be played on both sides of that. Now, again, Dow Jones, not quite a new high, at least on this chart. If we zoom it right in, you can see, that it's right on the money. It may in fact have just ticked fractionally above, but very, very, very small increment above that. Either way, it's still another one to look at that has seen a bit of run. The US 2000, the Russell 2000 has had the same thing. It has just flown up. So, it has been rising for quite some time. I mean, it's nearly a sheer cliff when you look at this sort of thing. And unfortunately, when you do get a cliff face like this, there's not much you can do in the realm of technical patterns because it's not presenting any. So that does give us a little bit of concern. But nonetheless, there's still plenty of scope on some of the lower time frames. You can easily sort of put some trend lines up in that sort of direction. And whenever you're in a trend, you should be wanting to focus on staying within that trend and looking for opportunities that might present themselves as opportunities to get into the same ongoing trend. It's much easier to trade that way than it is to pick the tops and bottoms of a trend and trying to capture the whole thing. I'd much rather walk away with a few pips in my pocket than none at all, or even some in the negative if I tried to pick the end of a run. So, we've seen a lot today. Even the Aussie dollar has seen some pretty good moves. I'll just move that on to us. I was looking at a position on there this morning, but ultimately decided not to take it just because I wasn't sure. And what's happened on the Aussie has really come. I've got a bloody thing. There we go. What we've seen on the Aussie has really been dictated by what we've seen on unemployment claims that we've seen today. So it did tick up. We've got this little tick up here happening now, but overall the entire day it is ultimately a little bit more positive. This morning when I was sort of sitting here, I was thinking, well, maybe this is, if we've got this as a long running sort of a trend going on that sort of direction. When I was looking at this morning, the price did look a little bit different and could have entered for a position, and ultimately I decided not to, but in hindsight I probably should have, not knowing that there was unemployment claims. Now, the reason I didn't enter on that was because I wasn't certain what the unemployment figures were likely to be. I knew that we had more employment, and the results of that today have actually shown a 90% increase. We've got almost 90% of the workforce back that we initially lost at the onset of the pandemic. So, that is good numbers. The more worrisome side is that there is much more part-time work that have filled some of those job placements than full-time work, indicating that there is still a significant part of the population that probably aren't earning all the dollars that they really require to have the same living standards that they had before the pandemic. So there is, a little bit of lag on that side, though this time around we saw more full-time jobs than part-time jobs. But for the last several months, it's been really the other way around. And so that does obviously give us a little bit of a lag on the economy as well. So now one of the questions that I was asked today, and I'm sure most of you guys would probably be interested in this because it relates to Bitcoin and it relates to Tesla, two stocks that, two classes of investment or asset that you can actually trade. And it's obviously one that's obviously pretty heavy in the media. So I'm just going to pull up a Tesla share price chart for us to look at because I don't have MT5 running right this second. So I'm just going to open it up on whatever I can in front of me now. This one looks perfectly fine here. I'll just bring this across to this screen. I'm hoping you guys can see that. I might just zoom it in a little bit. There we go. Now, Tesla didn't get the same pop. If we look at just even today, it's been pretty flat. And the same sort of thing can be said for Bitcoin. Bitcoin's not, had the best day. I have been quite long on it the last, couple of weeks, just, with little small trades, not wanting to get caught in anything. And even over the last sort of, we've had a rise over in the last month, but in the last week there's not been much. It's actually been more on the downside sort of thing. So even if we look here on the Bitcoin, which is daily chart right now, we've kind of got a bit of a wedge starting to form at the moment. There's our first sort of a support line, and this is the top side. So today I did take a little sneaky one, because when I was looking at it earlier, this was looking a little bit different. And I thought, because we didn't have a candle sort of below this support line, it was actually above. And it looked like it was going to sort of go at least 50% into the body. It was basically at the top of that wick. So I thought, maybe I'll have one here and try and aim to get back up on this side, looking for a breakout. It ultimately failed. I closed the position and decided against running with it for too long. But regardless, Bitcoin hasn't had a very good day. And interestingly enough, I decided to do some research on this. And someone was asking me why we weren't seeing the same sort of pop in price that we've seen on the NAS 100 or the S&P 500, the Aussie dollar, or any number of other markets that have been affected globally, and why Bitcoin and Tesla didn't, even in the hindsight of Netflix, which Netflix has nearly gotten something like 17-18% rise just in the last few days. And that's been really because that there is some such things as good tech companies and bad tech companies and everything else in between. And in this instance, I look at what's gone on with Netflix as having a fair bit of benefit. Netflix have just shown that they've got 200 million subscribers. Their revenue is ongoing. They've also provided us with at least some level of guidance to say they want to be looking at becoming net revenue positive in the near future. So here's the Netflix pop. There you can see, this is 5 days. This is just today, basically. And they've had a very, very nice rise. And so, today, not much, but in the overnight when we were first hearing about the inauguration, and this is probably going back from about Wednesday when they reported on their earnings as well, is adding into it, and then it's all just kind of mangled together. So it initially started off as about an 11% increase, and then it's popped up to about 17. Now, when we sort of look at that sort of circumstance, well, why would Netflix pop but Tesla not? Because Tesla's a good company, right? Well, a couple of reasons. One, Tesla's got competition on its way. We've already seen, the CEO of VW sort of throwing some shade at Elon Musk about their cars. GM have had Microsoft invest in their own self-driving and electric car manufacturing departments and startups. And we've seen, a number of other tech companies starting to come up in this, trying to sort of become the next Tesla. So I suppose from that side, there is a little bit of it. There's also some worry about it being perhaps in a bubble sort of state. And there's been a couple of articles about this floating around. I do somewhat agree with the nature of sort of Bitcoin and Tesla both being in what you would consider to be a condition of mania. And, this is not something that is uncommon. We know of some of the examples. 1518, we had the dancing plague. We've also seen the Salem witch trials count as that. And in this, a run on the bank, which is what we saw in 2007, but they're more common, in sort of the Wild West. But all of these are sort of conditions of, human behavior and their feelings on the emotional side of a market. And so, much as we've spoken before about the fear of getting out, the fear of missing out, and all of those sort of things, it kind of is a part of that. And in some of it, when there's no logic that's available, you kind of have to refer to the idea that perhaps there is something a little bit more emotional that's involved. And 2020 has been full of all of that. So, they're the two reasons. Now, the interesting part of the research when it comes to Bitcoin and Tesla is there's no correlation to anything else in the market. And the statistics were showing that there is actually a positive correlation of 0.06 coefficient for Bitcoin and Tesla. And the only common element between those two are the people who are actually investing in them. Otherwise, nothing else stands to make it obvious. So, there is a certain level of retail sort of traders being involved in some of these market movers at the moment. And with the rise of apps like Superhero and Robinhood in the US and Self-Wealth, they all offer very easy access for anyone to sort of be trading with. And now we've got much larger daily trading volume than what was even feasibly imaginable in sort of 2019. So there's plenty of that sort of action happening. Now, looking back at some of these charts, we've got, on the Bitcoin, we do have this wedge pattern. We're basically looking for a breakout to happen. Can we count this as a bit of a breakout? Like I'm pretty confident in it that we could, to a certain degree, and I'll show you why. Now, if you look at the two last times we've seen some big rallies up, we've had this slow move back down. So it's been, lightning fast coming up this way, and then it's been a slow dwindle down over about a year. Again, lightning fast up, slow dwindle down over nearly a year. And now this time, the same effect has happened. These three candles look just like these three candles and these three candles. So, it is, to a degree, I believe that there is a level of pattern recognition that is kind of happening in Bitcoin right now. Now, if we move it back to our daily chart, is this the beginning of it? Possibly. Is this a rest? Maybe. What am I hoping to look for, really? I'm wanting a breakout. I've been watching for a breakout for the last sort of 2 or 3 days. And whenever I do finally find that breakout actually happening, then I'm aiming to be on the right side of it. And effectively, I'll just let that run. I won't set a take profit. I won't aim for, a target price up here or down here. I will simply just trail my stop down behind it and look for a position around that. Now, as much as I'm not a fan of cryptocurrency, I certainly see the value in making money out of it. So if you can apply the metrics to any, you can apply anything that you learn trading into pretty much any market. Obviously, there are some variations if you move into options or futures or ETFs or anything else like that. And there's certain levels of research. It's important to always do your own research. But when it comes to this, really the basics of Bitcoin come from, your ability to sort of understand how, individuals behave in group populations. And of course, how people, like spending their money and the ability to read technical analysis. So, this is probably one of the more simplified versions, though they are incredibly volatile. Now, when it does come to Bitcoin, and this is something for you guys who might usually trade during the week but want to see something in the weekend, Bitcoin you can actually trade on the weekend. I think there is a little bit of shut-off time on some of the CFD variants. So I know at ACY there is a shutdown during the uncivilized hours is what I would consider them to be here in Australia, very late at night. But certainly the rest of the weekend they are open. So, something to consider if you want to get a bit of practice in and trade with something that's highly volatile. Now, we might move through some of these other 4 charts and just do some markups for you guys so that you might have something a little bit more practical. This was on a daily. We're going to zip it down to the 4-hourly. Nothing real. If there's nothing more to sort of say about it, I will just move on. In this instance, it is looking more and more likely for a short position on a shorter term time frame. Ideally, I want to see a break of around this price, and then my second break I want to be down here. But ultimately, we're really looking at the support and resistance off this side and this side. So there's still a little bit of support in the way of Bitcoin to come. So you could, put a line at this point. You could also then put another line at this point. And you can see this gap that we've got going on just here. There's a gap in price. Whenever there's a gap in price, it doesn't necessarily mean price is going to fill it. It doesn't mean it's going to avoid it either. So, but price does tend to behave a little bit differently around that area. So they're the sort of 4-5 different places I'm going to be watching my position on the way down. If it goes down, of course, if the breakout is on the south side, then that's where I'm going to be watching for. If we get through this point, my next point is going to be making sure it can bust the most recent low. And then from there, I'm going to be aiming to sort of see it go to here. And at each of these lines, once my position's in profit, I will move my stop loss to just behind the other side of it. So therefore, I've got a little bit of protection from any extra volatility, or if it tries to test it a little bit and pop through that line, I'll be sitting just a little bit behind. And each time it moves through one, I'm going to move my stop up to the next one. Now, looking at the Russell 2000, long-term trend constantly up. on this monthly chart, you can just see how far up it is. Like, even, I'll try and draw a trend line here for you. That's the best trend line I can do off it. Alternatively, I suppose I could go from here, and then you're sitting like that. Now, one of the ways that people do quite often consider doing trades when it comes to trend lines is they draw this line exactly like that. And the reason for it is that when they basically look at it as a alternative way to enter and exit positions. I might just change that color since we're using green candles on this chart. Oh, that's bad. Sorry, guys. Different color just to make it a bit simpler. There we go. Now, effectively, what you would consider doing is when price does eventually cross this line, you will look for a short position. Now, or if you're already in a long, let's say you're in a long position from down here, you would stay in this position until price close on the other side of the trend line. Now, good in theory, it does work. Great for probably scalping. Another example of it is, if you can draw a trend line, you've got a little bit of a range to work with. So in this instance here, you'd be waiting for price to close below this line, in which case it would be this big red candle, and you would be out for a couple of pip. But the issue that comes with it is you've got to wait until you can actually define a trend line. So in this instance, if this is your starting point for your trend line, you can't define it until this low here. So you've got to wait a little bit. Once you've got it defined, enter your position, you're really getting in here. By the time you get out, you're better off, and this is a monthly chart, so it's over a long period of time. But either way, this principle remains that you're sort of giving up the end and the beginning for a few pip. Now it does work, and if you're uncertain at the time or what it looks like in the moment, then on which direction you want to go, it's not a bad way to sort of help give yourself a bit of filter or bias. Now, looking at it from the daily chart does become a little bit more civilized on this, because you do have a little bit more data, a little bit more noise, of course, but certainly gives us a much cleaner trend line for us to go with in the current mood. You could go with the higher side sort of things, but realistically, if I'm pretty certain this will work. If you come across like that, you've kind of got a bit of a range. It's not perfect, but you can see how close they're sort of touching on that side. Realistically, you're going to want to be sort of moving it a little bit more like that, and you've now got yourself what you would consider to be a little bit of a contracting range. So price is getting narrower the further it goes through these two trends, and so it's a contracting trend channel, if you will. So they're our major lines. In terms of support, resistance, who knows? There's nothing above us right now. We're at an all-time high. That doesn't mean it can't continue to go up, and it certainly doesn't mean that it couldn't pop through the top of this channel, but it has worked for a little while so far, so it might as well try and work it out now. I might even just move that a bit more like that, and then it fits in a little bit better, and you will see the range a little bit better. So, monthly chart, daily chart here, where's your next line of support? You've got one there. You could say that the bottom side of this is one as well. And you could easily say that, this area here where it is probably your next one. There's really not much stopping it on the way up, though, or down. So if it does start to shoot down, I imagine that, it will get held up in between this 1929, 2030 price bracket here. But it is shooting up, and I think because we have the promise of more stimulus on the way, it will likely see a little bit more growth to go yet. If we wanted to really narrow it down to the immediate focus within this trend, you could add another one going across like that as a bit of a micro trend. If you want to see, okay, well, using that same principle I described before of using a trend line as your entries and your exits, you could certainly keep this line there. Should price drop below and close, aim for a short position down to the bottom side of this channel, and vice versa. If price is going to take off, then long position going back up this way. But when things are at all-time highs, there is, and everyone is guilty of it. Even I am. I tend to look at an all-time high, and this tends to be more of a human bias, conditional sort of thing. You think, oh, geez, that's expensive. And not realize that perhaps, we should have been in this position the whole way up, and not realize that perhaps now is only halfway done. So, that certainly always gives us a little bit of a bias on how we think about our markets. And, I think it's relevant to discuss that because of where we are in the current global situation with so much stimulus and the confidence that vaccines are probably going to have a little bit of an improvement on their delivery functions over the coming months, particularly after the most recent debacles where they've had large caseloads of them destroyed because of incorrect storage temperatures, all those sort of things. So that is something to sort of consider when we think about investing in anything. Is it at the top or is it really the top? So that's always something to sort of think about. Now on the Russell 2000, very similar to the S&P 500. I'm just going to zoom us out a bit. Like they're a little bit different, but the Dow Jones I'm sort of talking about. The Dow Jones and the S&P 500, like they're a little bit different, but they're almost, they're very similar at the same time. You've got this big sort of pattern sort of going on. You can see there's the better shape to sort of look at, and there's both of them. You can barely tell the difference. I'm flicking between both of them here, and they're almost identical. Yet you've got one that has 500 stocks listed in it, and one that has 30, and yet they're still cranking on through. Obviously, Dow Jones again. We're basically at an all-time high again. Drawing a trend line on this is, not an easy task. Yeah, you could go with a big one like that, but it doesn't really fit any of the market. So all the way up through this, I've been using sort of smaller lines, using that same tactic I was using before, going like so. When the line is broken, okay, I exit my position, wait till I got a new trend verified. Here's another one going up. Then I just keep moving my way along. There's another one going that way. And you can keep on moving it in that same sort of move. Now, this one does kind of fit, but it goes all the way through the guts of price at certain times. So, we're not likely to use that. Each time price breaks that trend line, I will leave it on the chart, but I won't pay as much attention to it. The current pattern or shape, resistance support that we've got going on here certainly doesn't give us a huge degree of confidence in wanting to take a position either way, because you've got swing high, swing low, lower swing high, bigger swing low, and then you get a new high that breaks a lot of it. So, it indicates that in and around this sort of area, which I'm just going to put a little rectangle around, in and around that zone is likely where we're going to get some turbulence if price was to come back down. So where we're sitting now, we can still use a trend line in moving it up this way. Again, just support, resistance, real basic sort of stuff. And it does match. So if you notice, like I can pretty much copy this line right across over here, and it almost fits. Like it probably fits better than the initial one that I drew, to be totally honest. You've got, it's sort of working. So, you could sort of think about this area here in this box here as being a bit of a rest for price, and then it's continued in the same trend. And it's quite often you'll find that happen. So I'm not going to look for taking a position off the top here. I'm going to look for taking a retracement on the way back down. So when the retracement comes back down, I'm going to look for a long position off the bottom of this. Why am I a little bit more confident about the Dow Jones continuing versus perhaps some of the other markets that we find? Firstly, it's the industrial index. So, we're not dealing with tech companies, all of the such, and certainly not all of the tech companies that are available. On tech companies, I'm being very sparing in what I want to invest into. But on the Dow Jones, I'm a little bit more confident about the idea of cyclical seeing a bit of a boost. We've already seen today, I believe it was Goldman Sachs, Morgan Stanley, and JP Morgan and Chase, which are kind of like the top dog, big three Wall Street investor-based banks. Earnings reports were pretty spectacular considering the conditions that they were in. And when it comes to their actual trading returns and the revenue from trading that they've actually made in the fourth quarter of last year, it was like 40% above what they did in 2019. So they've really upped their game on trying to make sure that they have that bank cash in there. Of course, some of the other cyclicals that you might consider are within the Dow Jones, and does give us a little bit of diversification if we're looking for it. And that industrial style of jobs is probably not a bad way to think, because if we think about extra money coming in via stimulus for the US, then we're likely going to see probably a bit more coming in the same way of the money sort of trickling down. It'll go to sort of people getting jobs. And we know the Fed's going to be keeping it supportive for some time to come. Each time there's a stimulus package, we're going to see money continuing to go up. And eventually, when vaccines are rolled out enough to warrant, more normal conditions, I suppose, or the old normal conditions of living, then we will probably see a little bit of a micro boom happening. I think the biggest issue that we're going to find at the Fed is actually inflation. And I did speak about that at the last webinar. I showed you guys a bit of a game and where you can, online, it's called Chair the Fed, where you can sort of be the federal chair for the day for a full term, which I think is 16 quarters for a federal chair to be running. So in this case, Jerome Powell has 16 quarters and he has the option of possibly being re-elected, or they replace him with someone else. Now, in that instance, when you've got such low rates trying to support the economy, at some stage when inflation ticks up, if you don't act very, very quickly, you end up with runaway inflation. It's a very difficult balancing act. I do not envy anyone at a central bank right now trying to make decisions, because it will eventually fall on their head if it doesn't go right. And that's not exactly a good way to be trying to do things. So, where might it go from here? I'm still thinking to sit in line with this trend. We've been going up for nearly a full year. Now, that does bring some level of concern on where things might move to next, but certainly plenty in the way of wanting to continue going up. A support resistance pattern right here. It's not perfect, but you could easily have run a trend line here a couple of hours ago and watched it bounce back up to run this test again, which has in fact actually in the last two candles in the last 8 hours popped above and created technically a new all-time high for the Dow Jones. So both of those are kind of interesting. But again, my game plan is still to wait for somewhere down here to look for a position to go back up that way until I'm proven wrong otherwise by either a break in the trend line, or we get some fundamental analysis that suggests things might be a little bit different. Now, that could be a little while to come. 15-minute chart here right now. Bit of a down operation move. I wouldn't be surprised if we see current price match this sort of stick here as a bit of a retracement. It is sitting at, like I said, sitting at the all-time high, and I want it to come back down this way before I consider entering a position. Generally speaking, I'll probably, if I was going to trade off this 15-minute chart, I'd be trying to look for an opportunity in somewhere in around this area, in between here and here for a bounce. I want it to be above this line here, this support line, which I'm going to put like that. That's really probably the favorite sort of area to go. It is a little way from price, so not perfect, but it is still within the realm of getting to that distance. And if it was to get back down around this way, even to this point here, let me show you just here, I'd be comfortable taking a little long position back up for another test. And of course, if I break through this line, I'll be looking for probably on the short side to get to the next line down. Now, moving on to our NAS 100, we have spoken a little bit about the Nasdaq 100 already. We've spoken about the idea of Netflix being a pretty good performer. In general, most of the companies that you find in the Nasdaq are on the upgrade sort of list. But when it comes to purchasing the Nasdaq futures or the NAS 100 at an all-time high, I suppose, like I said before, that behavioral bias of, each time we get a new all-time high, you sort of think, it's got to come back down soon eventually. But it doesn't. It's immune to the lead balloon. So I do hope that we see some level of a retracement, because in order for it to continue stagnating, continuing running up, it needs to have a period of stagnation or a little bit of a breather before taking off again. And obviously it gives opportunities for people to sort of get in who may have missed out on some of the action. Nonetheless, tech companies overall, I'm bullish on most of them. Not all of them, most of them. I don't mind the idea of NVIDIA, the chip manufacturer, although they have had production issues. I do like Netflix, obviously, with, I wasn't liking Netflix until the most recent earnings report. The last two earnings reports that they've offered haven't really been encouraging, because they've forecast that they're going to have a big drop in subscriber numbers, purely because, we were all thinking the vaccine was going to be kicking in very soon and the pandemic was going to be over. So a lot of people were not quite so confident in it kicking away and away and away and away again. But it's obviously just continued to steamroll with the subscriber numbers that they're getting. The one thing that you can be certain is they've really outpaced any of their competition right now. And this seems to be a common trend throughout the whole lot. We are seeing continually, these markets getting outpaced by, or being outperformed by 1, 2, or 3 of the really big companies in it. So, for example, if you look at the big 6 banks in the US, those 3 I mentioned before, Morgan Stanley, the Chase Bank, and as well Goldman Sachs, compared to the next big 3, they're widening the gap in earnings and revenue, and that keeps happening. And it's the same sort of effect. Eventually, you end up with something like Amazon, which is just so big, or Facebook, or any of those sort of things, where they're just so much bigger than any of their competition. The competition doesn't really have much option to sort of get around how they might do their operations, and it reduces the ability to be competitive. Now, S&P 500, again, same sort of deal, running up. We've looked at the Dow Jones on the 30. They have very similar things. I will sort of zoom down on it a little bit to sort of see if we can find something that we like. Now, on daily chart, easy lines to sort of place for today, up on this way. These are probably going to be relevant for a little while, like that. You can also, like I said, use the trend channel method and run across the top, but it's not quite as perfect. You've probably, again, you've got this little bit of a contracting thing going on. The top one doesn't really work for me, but that one there isn't too bad. It is only just minorly contracting. And you could trade this range, for an extensive period of time. Obviously, we've already been able to do it for a couple of months. So, with more stimulus on the way, once we do get confirmation of stimulus checks going out, I'm anticipating this and the other 4 to add to that, the US 2000, the Dow Jones, the Nasdaq 100, the S&P 500, all to see a bit of a boost. I wouldn't be surprised if the ASX ticks up as well, because it increases the chance of people wanting to do business with us and buy products from Australia as well using US dollars. So that's all a benefit. And I would be short on anything US dollar when the stimulus does come in as well. Anything that's a pair of the US dollar. So it's like euro dollar, we'd be aiming to sort of go that sort of way. But I mean, things can change, but otherwise I'm going to remain with that sort of optimism for it. Ideally, you can see these big red sharp moves down. I don't want to get caught out in one of those. I don't double up positions when they're running away from me. So I would much prefer to wait, and I would rather wait because I want to be certain that I'm actually getting in at a point where I've got support beneath me to look for my long position and try and get it back up on the other side. So this play you've been able to do for, a couple of months, wait from the bottom. Really, you could identify the support here at this point. So from between here and here, you've been able to basically wait, take your long position at this point, trade it all the way up, and as soon as it gets within a reasonable distance, close it out. Naturally, it doesn't always make it to the top, so you can have a secondary line like so. That will give you a bit of an idea on where the previous highs have gotten to within the trend channel, and knowing that the freaks outside of that are really the ones that you let your position run. But if you get close to this line or near this line, then you're happy to kill it off. In reality, you should probably move this line down to about there. Anything above that sort of line is where you're going to be looking to close a long position, anytime you can, really. If you want to close it. You can leave them running. I personally close them, and should it continue to rally up again, I will sort of re-enter my position on the hope that it will go to the other side. But again, dodgy trade. So right now, where it's sitting here, this doesn't bring me the most confidence that price is going to continue to rise up and hit the other side of this. I'm expecting to see us have a little bit of a tumble. Secondary reason for that, the current candle on the 4-hour chart just here, I'm going to zoom in for us to have a look at. This is what you consider to be an engulfing candle. An engulfing candle is any candle that goes into 50% of the previous body of a candle in the opposite color. So it can apply to uptrend, downtrend, or up bull candles or bear candles, makes no difference. In this instance, it has already pushed down beyond the close of the previous and has closed and is getting ready to sort of close more than 50% into the body. If it closes more than 50% of the body, I'd wait until one more candle comes through, and I want to see that sort of drop. And unfortunately, you might end up with situations like this, where you have 50% of the body, then the next one just skyrockets down. But even then, this candle would have taken some time to get down to this level. Even though it's quick and looks sharp and one big move, it probably would have taken at least an hour to get down there. So we would have been able to find another opportunity on a smaller chart. If it engulfs the entire candle and beyond, I would not hesitate to get in, run a stop loss at the all-time high and a little bit behind even, in fact, and let it run to the bottom side. But again, doing those counter trend trades, I use the minimal amount of risk, and I have no fear of killing the trade if something goes awry. Now, dropping us down timeframes here, nothing real on the hourly that's signifying anything major changing. Higher high, higher high. We're now looking to see if this becomes a new higher low, but that will be a little bit of formation to come. We're still waiting on that, a bit more on that. Same sort of deal here. Nothing real standout, although you could potentially call that a bit of a retracement or a bit of a rest, and it might be looking to tick off again. But your time frame really does dictate what your plan of action is going to be, because if you're trying to trade charts based on a 15-minute plan on a 4-hourly, it's not going to work, and vice versa the other way. So it's important to always have that. Now, I'm hoping you guys have gotten a little bit out of that. No one sort of hit me up with charts. I know sometimes I do cover quite a few charts and people do enjoy looking at it. I would love to hear from you guys. Let me know if there is anything I can do in the future to sort of improve some of these sessions, of course, and I'll give you a little bit of an update. So I will wrap it up for the evening, and we can sort of look at some of the other moves. Just very quickly, when it comes to the Bank of Japan, they ended up not wanting to change rates at all, and they forecast that they were going to see a bit of tapering in the growth for this year, which is not actually a bad thing because they're expecting like negative growth. So tapering of that is a little bit positive, and they're expecting to see proper growth in next year, in 2022, starting to roll back out again. So basically, they're indicating that they think that the mechanisms of support they're offering are quite okay at the moment. Naturally, one big one to look at when it comes to Bank of Japan, bond purchases from the government and ETFs as well, because they have government ETFs that they purchase. So both of those are worth keeping a close tab on, just to see if they increase or decrease. If they decrease the amount, it means that they're quite happy with the direction that the economy is going. If they increase, it means they need to keep stimulating the economy on those. The ECB tonight is expected to have very much similar sort of talk as the other central banks have spoken this week. We already know that stimulus was around the corner from the ECB. They already changed some of those plans last time around. So this time, I believe they'll be a little bit conservative. And they will likely not do too much, though we do have a little bit of time before they come out. In terms of your calendar events and time of day and all that sort of thing, I do have a calendar here. I'm not sure what time zone everyone's in. So at the moment, the next one that we're really going to be looking, that's not really worked where I wanted it to be. I'm just zooming that out a bit. Where's our Thursday? There's our Thursday. So the next one that we've got here, this is in a GMT time zone. So it's currently not GMT, it's a different time zone. It's currently 3:42 a.m. on this, so we're still, a good 50 minutes away from the pound one, meaning that we're a good 2 hours away from the European monetary policy statement when that comes out. For those of you who might be interested, you can use this website and you can click on them and it'll give you a bit of information on them. I don't think we're going to be seeing too much action from the ECB tonight. It'll likely be comments on, where they see the forecast going for the rest of this year, and potentially where next year, what they might do around that. So, it is going to be a little bit tepid. I don't think we're going to see a lot out of it, but, all eyes are still going to be remaining on them and in the US as well when it comes to sort of the first policies and changes that we're going to be hearing from Biden, which are likely, obviously, on the stimulus front. And he's already started changing some of the stuff that's been previously in place to try and make it a little bit more accommodative, but that'll take some time for us to sort of get there. Now, moving on, if you do want to have a look at registering for the next webinars, or you want to have a look at some of the traders and the trades that are going up on FinLogix, feel free to jump on that. The FinLogix platform is starting to get a little bit of traction, so there are more people posting trades on a daily basis that might give you a bit of an idea or insight, or even a little bit of encouragement. And as well, obviously, plenty of news and trade ideas come through from our blog site. Most of it is coming from me. And if you do have questions or you want to let me know some feedback, anything like that, feel free to shoot me an email at talktoal@acy.com. I'll happily reply to anyone's emails. It will just, sometimes it might take me a little bit longer to respond to them, depending on how in-depth your question is. I like to be thorough. And of course, depending on what I have going on any given day, but I will always try and reply as timely as possible. Now, that'll be all for tonight. I do look forward to seeing you all again. Next Tuesday, same time, 7 o'clock, I'll be around for any of your questions and, of course, to present some of my own view. So feel free to chime in and let me know how I've done. Bye for now.